Well, we continue to see reactions to the believed death of Wagner chief Yevgeny Prigozhin in recent days, particularly in Russia. Of course, this came 2 months after he was branded a traitor by Russia's Vladimir Putin for a short-lived rebellion against the nation's military in June. The reaction across the country is seen as a sign by the international community there's potential challenge for the Kremlin. We'll continue to watch those developments as we also watch the developments in China, which we mentioned off the top of the program. China taking fresh stimulus steps to help its economy, but you've got these lingering worries. We talked about shares of China Evergrande Group under pressure as the world's most indebted property developer resumed trading for the first time in 17 months. And the company's latest results showing a loss of more than $5 billion in July. Evergrande had filed for Chapter 15 bankruptcy protection in the U.S. But given some of that geopolitical uncertainty, our next guest is leaning into investments here at home. Mark Wiseman is chair of one of the country's largest institutional investors, AIMCo. He previously served as the head of the Canada Pension Plan Investment Board, and he joins us here in studio. It's nice to see you.
Good morning. Good to see you again.
And obviously, every day you see these headlines globally, and they can be unsettling. But when it comes to your money, it is influencing how you think about that, too, right now.
Well, I think more so than ever, and I think that's one of the things that I've been writing about. You know, I've had this recent four-part series in the Globe and Mail talking about the changing paradigm of investing. And I think one of the big changes, not just the interest rate environment, but one of the big changes is geopolitics. And geopolitics has become much more important to all of us as investors. We were in a world really since the Cold War that's been quite stable. But things have moved very, very rapidly. And that Royals market, that changes the nature of risk and return. And that makes a big difference to the way we have to think about our portfolios.
Does that include sort of shifting away from this idea of globalization and markets worldwide opening up and investors tapping into that and instead thinking a little bit differently, the same way that governments seem to be thinking differently now?
I do think that investors have to think differently, and I've been a big fan of diversification. It's the only free lunch in investing. We've talked about the need to diversify across asset classes, but also across geographies. But I think the way that we think about diversification today has to be different than it has been in the past. And I think what that means is being more careful about where you're diversifying your capital and making sure that you really understand the risks that you're taking and that you can get your money back. And I think there's two things that come from that. The first is, as you think about emerging markets, that's really changed. I mean, you just talked about what's been going on in Russia with the Wagner Group, uncertainty there. Well, people forget Russia was one of the BRICS, right? The Brazil, Russia, India, and China that we all talked about as the next great places to invest. And as it turns out, really only one of those BRICS, being India, appears to be easily investable today. That's a huge change, and I think it means we have to reallocate portfolios. And secondly, given the risk in these markets, given geopolitical risk, I actually think today that we have to, I've criticized home country bias in the past or home market bias. I think today, more than in the past, we do have to think about no place like home and think about the North American market as maybe one of the better opportunities out there right now. So for me, that's a really big paradigm shift from the way that we've talked probably for the last 2 or 3 decades.
And for some Canadian companies, I mean, there has been a push for them to take advantage of the global opportunity and to grow. And it sounds like you're not suggesting investing in North American companies or Canadian companies means that you're just investing in the North American economy. It's just, to your earlier point, if you're investing directly in some of those other world markets, it could be a trickier equation for investors.
Right. I think that's right. I think that we still need to be global. Our companies need to be global. We have to go abroad. We have to tap in, particularly as Canadians, into those larger markets. But if you weigh out the on a risk-adjusted basis markets today, North America, particularly the U.S., is looking pretty attractive. So I would say for Canadian companies and Canadian investors, yes, you have to be global. Yes, you have to diversify. But maybe this domestic North American market's got a little bit more fuel in the tank than many of us thought, particularly on a relative basis. So I'm not suggesting that you don't diversify. I'm just suggesting that risk-return trade-off has changed. and you have to get paid quite a bit more today for the incremental risk than maybe you had in the last few years.
So that's helpful context, and probably, for a lot of investors who are watching these global headlines of uncertainty, they will probably find some common ground with what you're saying. There are also sometimes criticisms that Canada needs to do more, needs to grow the economy, needs to find ways to bring even our resources to more pockets around the world. So if you're leaning more into home strategy, does that also mean you might be leaning on the government to make sure that we've got the right strategies for being a more global, diverse economy?
Well, look, I think the role of government is to set the boundaries and set the conditions for success. The private sector is the best way to allocate capital. And I think, governments that have very strong industrial policy that say, we're going to choose winners and losers, governments aren't good at that. The private sector is the best way to allocate capital. What the role of government should be is to ensure competition, ensure that private capital can flow easily, and ensure that the conditions are there to allow Canadian companies to compete both at home and abroad. And I do want to say, when I talk about North America, there's huge benefits to a unified North American market. But in Canada, we do have to pay a lot of attention to the productivity gap that we have between ourselves and our neighbors to the south. And there's a lot of reasons for that, but one of them is just a less competitive market up here.
All right, we're almost out of time, but that idea of a unified North America, I'm hearing a lot more about that. Does that just mean there's this divide between, say, North America and China, it could only grow going forward?
Well, I think what's happening is that the world is regionalizing, right? We have sort of an ASEAN bloc. We have this newly kind of invigorated BRICS bloc that includes the Middle East and Pakistan. And so we also need to think about the North American bloc in this new world order. And I think for Canada, we can win, but we've got to be deliberate in our thinking in that regard and make sure that we're keeping up to our neighbors to the south in terms of our growth and our productivity. We've got a huge number of advantages here, including demographics, including a growing population, but we have to make sure that we're putting our both human capital and real capital to productive use.
All right, Mark.